Welcome to the Smarter Trading Podcast. If you want to sharpen your trading skills or become a more savvy investor, then you're in the right place. Every week, we sit down with professional traders who are ready to share practical insights on what it takes to succeed in modern-day markets. Smarter Trading, the show to watch to trade smarter.
Evan Medeiros is the founder and CEO of The Trade Risk. All opinions expressed by guests are solely their own opinions and do not reflect the opinion of Evan or The Trade Risk. This podcast is for informational purposes only and should not be relied upon as the basis for investment decisions. Evan and guests may maintain positions in securities discussed in this podcast.
Hello, everybody. Our guest today is Brian Lund, a fintech executive, investor, and writer with over 35 years of trading experience. Brian is the publisher of the Lund Loop, a weekly newsletter in which he writes about the intersection between markets, trading, and life. In this episode, we talk about what it was like getting started in the 1980s trading. We then get into some of the psychological hurdles that make trading difficult, like wanting to buy stocks when they're cheap and not knowing yourself well enough. We then move on to discuss the question of when should a trader quit? That goes for when things are going well and when things aren't working out. When should you walk away to reset or simply say, hey, I've made enough money today, let's call it a day. Please enjoy this episode with my friend, Brian Lund. How is the Discord thing working out for you? Because I know that's a new little ad for you, right? Like a new addition?
Yeah, I mean, it's just a value add. I mean, I'm not trying to... what I specifically said when I let people know about it is this is not a picks room, okay? And it's unmoderated, and I may not even be in there for 2-3 days at a time. Like, I just wanted to create a venue where people that were like-minded and, you know, in my community could come and just be the anti-Twitter. You know, I wanted to set it up so that people that have experience can share, people that don't have experience can ask questions and not be afraid of it. And it's been great. You know, we've got 320 people that registered for it, and there's give or take about 100 in there actively on a daily basis. And so, you know, it's great.
That's awesome. Yeah. And that's a cool place just to kind of hang out for you during the day then, pretty much, right?
Yeah. I mean, look, the way I look at social media or Discord or all that, everything is, it's all just another set of eyes or thousands of sets of eyes for me and me for other people. Like the more I can interact with people, the more I'm going to get ideas, either concepts or even stocks. And it's not like they're going to tell me how to trade or I'm going to tell them. It's like, oh, I've got 18 things I'm looking at over here. I didn't see that, but that looks compelling. So it's just another way to do that.
So I give you a lot of credit because in an older generation, let's say, right, especially in trading, people tend to be very guarded and very closed down. And right, you've taken the other side there. Like that is a great insight, is that, hey, I just got to share it. I don't have any big magical edge that I'm going to tell you about. Like I need to hear more ideas and feedback because it's better for all of us, right? Like, yeah.
So let me tell you about this theory I have about that. So it all comes down to the VCR, right? So the VCR was the first real piece of technology that was ubiquitous in my generation, in your house, right? And so some people in my generation figured out how to program the timer on the VCR, and some didn't, right? And the ones that didn't, and anyone that's over 35 knows what I'm talking about, would just see that little light blink 12, 12, 12, right? And my theory is that if you were one of those people, you know, when I was 16 that could program the VCR, you fell on this side of always being technologically adept, right? And if you couldn't, you fell, and the split is really in my generation. There's people that are my age that are super into tech and forward thinking, and there's people my age that aren't on Facebook or nothing like that, right? And the way that translates is that it used to be that the way you profited off of a great idea was to hide it away from everybody and, you know, get lawyers and protect it, right? And there's still people out there that have that attitude, whether it's something they want, a product they want to produce or a service or just how they interact with people. Then there's the other side, the more technologically forward thinking. There's like, hey, you know what? I'm going to share what I've got, right? And I'm going to get it out there and I'm going to iterate and I'm going to help people. And like, that's going to come back to me, or it's going to spur me to innovate other stuff. And so that's what I kind of look at it like, hey, I got an idea, you got an idea, let's share them, let's kick them around, let's figure out. So it's just, that's the, I figured out how to program the VCR.
I love it. Yeah. I mean, it's kind of hard. I mean, it's not natural sometimes to you want to protect something, right? You want to think you're the smart one that has this great idea, but the truth is, I mean, I think we've seen in trading, right? Like even, what was it? The turtle story, right? With Richards, right? He was convinced he could sort of publish all the rules, but it was such a hard system to follow. People wouldn't do it anyway. So like, it's been seen sort of time and time again. So yeah, I love it. I find great value in sort of sharing ideas as much as I am an introvert and everything else, but I don't want to get too far in before I take a second dig at you and out you now. So I'm gonna drop a secret on good old BC Lund here.
Boy, this is like a machine gunning right here. I don't know.
Why did you agree to this? I don't know. So let's rewind the tape 6 or 7 years ago. I'm walking around this trading conference down in San Diego, California, and I spot in the distance Brian Lund.
This is the origin story. All right, go ahead.
That's right. And we hadn't met each other, so I knew who you were. And I see you over there and, laughing, having a good time. So later in the conference, we find our way near each other and we start talking. But in my head, I'm looking at you and I'm saying, well, I got to be careful with this Brian Lund figure because he tells people like it is on Twitter. I've seen him and I need to be very careful with what I say about him. And we start talking and you're a teddy bear. You're welcoming, you're inviting, you're introducing me to everybody. So that is the secret of Brian Lund here is you can't trust the Twitter persona. He is a gentle giant. So that's the secret right there.
If you look at the pinned tweet on my on my Twitter feed, it says, "Fun fact: I'm more palatable in person," and that's true, right? When I'm
100%.
When I'm on Twitter or stock twits, or whatever, I'm lipping off. I'm just shooting my mouth off, and I always say that to people, like people that want to get into big, heavy discussions, whether it's on stocks or life or philosophy on Twitter. I immediately say, like, this is Twitter. It's Twitter. Like this, what are we talking about? We're not going to have this discussion here. It's like I'm just throwing out stuff, and you want to have a discussion at a bar some night with drinks, whatever. That's great. So yeah, I'm a little bit edgy on Twitter, but I don't have the guts to keep it up in real life. I don't know if I'd say I'm a teddy bear, but I'm trying to be more personable as I get older. And that was Oktoberfest, right? That's where we met, right?
Yeah, and we missed it this year, obviously, but yeah, always a good time. And yeah, you buy me all the drinks at the open bar, so you're great. You're great.
I'll buy you all the drinks you want at open bar. All this free. I'll buy them all.
That's right. Oh man, do you remember the first stock you ever purchased?
Yeah, I sure do. So I'll give you a little bit of a backstory. So
sure.
Once again, if you're under 35, there used to be these things called newspapers, right? And as a kid, I was fascinated by the business section of the newspaper because they would just print all these numbers. And it was, the closing prices on the commodities, stocks, bonds from the previous day. And I didn't know what they meant, but I knew there was like a puzzle to be solved there. And if I could solve it, money would be my reward. So as I got older, I tried to learn more about stocks, and I used to watch this show called FNN, which was the Financial News Network, the precursor to what's now called CNBC. And so when I turned 18, I decided I'm gonna get into this stock thing, but I didn't know how to buy stocks. There were no online brokerages, and so I didn't know who to talk to or where to go. Fortunately, right around that time, Sears had decided that they were going to start introducing financial services into their stores. So they would have like an Allstate insurance or a Dean Witter broker, or different companies would have these little mini stores in there. So I drove down to the mall, went into Sears, and in the back corner, in between the Kenmore appliances and the Craftsman tools, was a Dean Witter, a one-man shop. I walked in there. I said to the guy, I want to buy $300 worth of Altos computers. Now, I wasn't exactly sure what Altos computers did. I figured it probably had to do with computers since it was in the name. But I had seen them on FNN. I'd seen the CEO interviewed there, and so I thought, it's good as any stock. So we did the transaction. He handed me his card. His name was Randall Woodworth. I swear to God, the waspiest name right out of Trading Places. And he said, call me in 6 hours after the market closes, and I'll tell you the price you got filled at. And that was my first entree into the stock market.
That's incredible. And so that was it. That was you were hooked at that point for the most part.
Not yet. That stock, I think I ended up with a scratch. It was about even on that. And then I bought a stock after that called Arrow Gum, which once again was from FNN. I think they made gum. If I remember correctly, I don't even know how I remember this. They were going to make some sort of caffeinated gum. It was going to change the world, right? That was big technology in 1985 or 87. Caffeinated gum. No, 85, yeah. And but the stock after that I bought. I had a buddy that moved out. He was living down at the beach. He had 3 roommates. And one of the guys was a really old guy. He was like 25, right? And he worked for Adobe. And he told us that Adobe was about to become the default desktop publishing software for all IBM computers. IBM used to actually make computers under their own name and sell them. And they had a big chunk of the marketplace. So this is going to be a big deal. So I'm like, okay, great. That's good a reason as anything. So I bought Adobe. And within the first month, I made more money than I had made from all my summer jobs, all my Christmas gifts, all my birthdays combined. And I said, you know what? This is what I'm going to do for a living. It's so easy. I'm going to retire as a multimillionaire at 25. And of course, as you well know, that's one of the worst things that can happen when you're starting out, is to be successful right away, right? And
sure.
I spent 5 to 10 years after that struggling because I just didn't know what I was doing, and I thought it was supposed to be a piece of cake.
So it's incredible because, Adobe still a very prominent figure in markets now. Market cap, 200 billion or something like that. So you must have got it right at must have been IPO time for it back in the 80s. But were you trying to? Did you know the difference at that point between like trading and investing? I mean, you were just trying to make money. That's probably the framing in your head. Like, were you trying to turn over quick, find the next trade idea, or were you just trying to like buy something to hold it for some amount of time?
That sort of logical or thought structure didn't even exist back then. It really didn't. I mean, there was no retail community of traders. And I was thinking about this before we got on, and the thing that I can say that trading in 1985 would be the same for an 18-year-old as 2 things. One would be online betting, and the second would be basically the equivalent of what my kids do on Discord or Roblox, right? So in terms of the betting, right, there was no online betting, there's no DraftKings, none of that stuff back in 1985. And even if there was, you had to be 21 to do it. But at 18, you could open up a stock account, and that was basically a way of making wagers, right? So it satisfied that sort of itch and that thought process. And on the other side, it's weird to think of it this way, but it was really the first interactive social thing you could do, because you put money in the market, then every day at the end of the day, the newspapers print the scores, right? Which is basically the closing prices. And everybody looks at the scores. And even though you're not interacting with people, people are out there doing the same thing that you're doing, right? And then the next day, there's a new set of scores. So that's, so basically it was nothing related to the way I trade and invest now. I think back then it was just satisfying something in an 18-year-old in 1985 that's similar to what young people or even older people do today in terms of social media or gaming and sports betting.
Yeah, that's such a good insight. The world was just so different, right? Back then. I mean, it was not like it is today. And I guess, I was talking with a mutual friend of ours, Sean McLaughlin, the other day, and sort of talking about the analogies between maybe the rush of retail in the 90s. And I know you're even talking in this period a little bit earlier than that. But if we think about like the rush of the 90s and kind of where you were and thinking of it as like a social, like, bringing people together, checking the scores at the end of the day on the paper and everything else, do you get any of that like, is that what's happening right now with this new inflow of 18-year-old trade or 20-year-old traders and Robinhood and crypto? I know it's tougher to relate, but like, do you feel it? Does it seem like it's similar to back then?
It does. I mean, I think the reason that the 90s, the late 90s, and the internet bubble will always stand out for people my age is because it was the first time we ever experienced something like that, right? There's no blueprint ever to relate to. So now that we're seeing it again, we've kind of seen something like that. So it's hard to be objective and to say if it's purely new, but there have been times since we hit bottom in last March or the March before, I guess, that it did feel like that, and it certainly feels like that in the world of crypto. I mean, there is no doubt like the great analogy here is that there were so many internet companies in the late 90s that went public that had no revenue and were losing money hand over fist. And we only hear about the Amazons, right? The ones that survived, right? But there were literally hundreds, maybe even thousands of companies that went from zero to here and then went away, and you never hear about Blue Martini, right? Or I mean, there's just tons of them, right? And that's what some of these, or a lot of these altcoins are like. They're the exact same thing to me. I mean, I know that there's people out there that will say, well, there's a use case for Dogecoin, there's a use case for this, but most of them are going to blow up. And I'm a guy who believes that there is a use case for crypto and blockchain and NFTs like that. But I think there's just so much speculation right now because of so many factors that you're going to see something not unsimilar to what happened when the internet bubble burst in 2000.
Yeah, ultimately it's good. It's a good thing. I like to see the new inflow there, but it's just trying to do it responsibly. But I mean, I guess so. One of the things I wanted to ask you is that we've seen. I mean, there's so many articles on risk management, how to look at a chart, how to identify a breakout setup. Right? There's probably millions. There's got to be millions of articles and videos posted. Do we need more of those? Like, do we have to keep is it so important that like risk management, do we just have to keep plowing out those articles, or is it something like people just have to get in there and figure it out and lose some money and, go down that route?
That's a great question. I mean, not to get political, but I mean, you could say the same thing about vaccinations, right? Like, I mean, I just saw today there's a $3 million grant or something to, just to bring vaccine awareness. Like, does anybody after a year and a half not know that there's a vaccine out there, or does anyone not know? Like sometimes I go to Whole Foods and I see that they have the sign at the front that shows the proper way to wear a mask. Like, is there anyone that doesn't know how to wear? Sure. There's just a certain percentage of people that messages will never penetrate, and it depends on what the if the message is chocolate ice cream is delicious, it's going to get a high penetration rate, right? But if it's something else, especially if it's based upon beliefs, there's a certain group that will adopt it. There's a certain group that will never adopt it, and then there's that middle area where it depends, right? So, and I just think that's human nature. I also think when it comes to risk management, there's so many things about trading that are just counterintuitive to the human nature, right? I mean, one of the ones I always like to talk about is when we're conditioned from the time we can understand the concept that the cheaper you pay for something, the better, right? You buy a new car and you drive it off the lot and it drops in value, or you want to get a refrigerator, you want to get it cheaper, right? But that's because they're deteriorating assets, right? But people take the pricing mentality and then they bring it into the stock market, and then they want to buy something that's cheaper. And you and I know that sometimes that's okay if it's temporarily cheaper while it's in a overall uptrend. But if it's something that's going down and down and down, and you're just buying more and more and more, but that mentality is counterintuitive to how we learn value. So those are some of the things that will always be there, that will block education, that will block, good content, just those preconceived notions of how things work.
Yeah, I like that analogy a lot. I've never thought about the, even just like you say, the mask example, or just some things are going to get easily adopted, especially if it's easy to do and it's got a quick reward, loop. That's something that's easy. But if you're telling someone to manage risk or do something that's not so fun or sexy or interesting, then yeah, it's going to be tougher.
If you think of just going back to that mask analogy real quick, if you think about that, if you really break it apart, if somebody walks into Whole Foods and they're not wearing the mask above their nose or anything like that, it's not because they don't know how to wear a mask. They're making a statement right there, right? And then you as Whole Foods have to make a decision. Do I then confront somebody knowing full well that they're making a statement? You can't deceive yourself and go, well, they don't know how to wear it. They do, right? It's the same thing in the markets, right? There are some people that are just going to say, I'm not going to do that, or that's not right, or for whatever reason, they're just not going to do that. The question is, do the trading community, the trading educate, do we spend our time trying to, no, you have to, or do we just say, let's move on to somebody that is open to that idea?
It's a great observation, and it is case by case. Yeah, I think you're right, and I think you have to decide if how much time you're gonna spend on that particular individual. So
get a couple of kids and you'll understand this totally instinctively.
just dogs for me.
I mean, dogs are great because they'll do what you tell them to. But kids, like, they know. Like, I was the smartest 16-year-old, 30-year-old, 40-year-old, 50-year-old. Nobody wants to be told stuff, right? But some people eventually, mature and they're open to learning, and some people don't.
If we sort of switch gears to a little bit on your framework for markets. So we've talked a lot. I know you trade futures. I know you trade stocks. But how do you? What's a day in the life of Brian Lund look like? You boot up your computers early. I'm assuming you're on the West Coast, so you got to wake up early. What goes through the head? How are you framing out markets? What are you thinking about in terms of opportunities, positions, and all the fun stuff? So
I try to go into the day with a list already of what I'm going to be looking at. I'm not very good at, I know people that will run a scan first thing in the morning to find gappers, right? And they'll then decide which one they want to trade. Like, I'm not good about that, right? I usually have 15 to 20 go-to stocks, and we all know what stocks they are. They're the stocks that are hot, that people are trading. They're liquid. I know how they move. I know there's going to be some action in them. If there's not one action, this one, there'll be action that one. So I like to have all that done the night before, if possible, because it is so early here on the West Coast. And then that way I can get up and I can do a little mental stuff. I can do a little bit of stretching, and I meditate for a little bit, and just do all the stuff I need to do to get myself in the right mindset. And then it's just a question of following the action. I've got what I like to do for especially for day trades is to have the high and the low of the previous day on a stock marked off, right? And see how that plays within the recent trend. So, like, let's say a stock it's in an uptrend, but it's taken 3 days and pulled back. Now I've got the high and the low. Maybe I'm looking for it to gap below the low and then reverse and come back, and then I've got a level to trade against, right? So that's basically how it is with stocks. I've got a go-to list. In terms of futures, I only trade the NASDAQ E-mini, and that's something that I'll obviously, I'll do at, I don't want to say on the fly, but what I mean. It's hard to have a plan for that. And what I'll usually do with that is I have 3 charts. I have the minute chart, 5-minute chart, and the 30-minute chart. And the first thing I'll do before the market opens is I'll expand the 30-minute chart, and I'll try to figure out what the levels were overnight, the big levels, right? Sometimes I'll even do an hour chart. And then as I'm setting those levels, they're also being, they're synced to my 1-minute and 5-minute charts. And then the way I found for me for trading futures is I tried to trade futures for many years the way I would trade a stock. I try to trade a breakout, right, or a breakdown. For me, the way that futures work best is trading extremes, right? So if I know that there's a big level on the 30-minute chart, but on the 1-minute or the 5-minute, it extends really fast and it gets down to that level, I'll play it for a rebound. I know that it's due to rebound. So I'm a lot more dynamic when it comes to futures. I mean, some futures trades I'll hold for seconds to a few minutes. And so it's just a combination of I guess the longer term, the day trades that go into swing trades for my go-to list, and then the fast, almost scalping like futures trades.
How long will you hold on in terms of the swing or overnight? How long will you hold on to something if you like it and it's working?
A lot of that depends on price action, right? Like if I see a stock that let's say a stock makes a really strong move 3 days in a row, right? It's got 3 really strong green bars, and it moves up into a resistance level. I'll take some of it off at least, right? Now, if it were to kind of meander up to that level, right? I might, let's say it took 7-8 days to get there. I would hold it longer. So a lot of it really has to do with the how fast the price moves and the price action. For how long I'll hold it.
Yeah, old school sort of price action trader, interpreting sort of how fast the move is, how urgent it is, and that type of thing. So yeah, I love that type of approach. So the thing that always interests me with people sort of trading in your shoes is that it is potentially a very emotionally draining activity, right?
Yep.
Do you find that to be true? And if so, how do you manage it? How do you make yourself not just want to hit the bottle at 11 a.m. and
It can be very emotionally and by extension physically draining. And I find the older you get, it just it's more so, right? Like I was trading just. The only thing I was doing was trading full time during the financial crisis, right? I picked a great time to just go out on my own and trade my own book, right? And that was literally like there were times at the end of the day where I felt like I wanted to puke, right? Which is not a good sign, right? Let me just say that to anyone that's trading. If you feel like you're going to throw up from a position or a trade, that you're doing something wrong, right? But I was a lot younger back then, right? I could handle that. Nowadays, it's not as easy to recover from that. And so, I have this philosophy that we all have limited resources, right? We have limited time, focus, energy, patience, no matter what age you are. And any of that you expend in one direction, you can't put in another direction, right? So I try not to get too emotional or too attached to anything that's going on. And then when the day's over, the trade's done, I try to just get it, even if it was a bad trading day, like turn the screens off, go outside, walk, clear your mind, and then reset for the next day. And I think another thing about being able to put that emotional distance is that one of my theories is that people get emotional about stocks or trades because they're afraid they can't do it again. Right? They find what they think is a great setup, and this is the one that's going to, make them a gazillion dollars. And then when it doesn't go right, they don't want to close it out because that ends the dream, right? And what they really are realizing subconsciously is they just got into it willy-nilly. They don't know why they did it. There's no methodology, so they can't repeat it. So it's like one and done, right? And if they let go of that, that brass ring, they're screwed. As you get better at your methodologies, as you are more confident, you realize, hey, I can do this over and over again. It's just up to me to be disciplined. And if you remember that, when your position's starting to go, red, you can go, you know what? I'm going to cut it here at a point before it gets too emotionally impactful, because you go like, I'll do it again sometime, right? But what happens is we let it go past that point, then it gets too big, then we don't want to let it go, or we're just afraid, how will I ever find another winner?
So it reminds me of a blog post you have. I think it's titled The 10 Commandments of Trading. And one of your 10 commandments on there is to know yourself. And I'd love if you could just explain just for a minute why that's important and what you mean by it.
Yeah. So when new or novice traders ask me for a piece of advice, this is the first piece of advice I give them, and I'm 100% serious on this. I say, go to therapy. Go to therapy, okay? Because for some reason, the market has this ability to draw out of us all the baggage, the emotional baggage, the mental baggage that we've brought with us throughout our whole life. Stuff that doesn't even have to do with finance, right? Because your mom didn't praise you enough, right? Somehow it comes out in trading, right? And a lot of times, we don't even know what our hangups are. So I tell people, get into therapy. Worst case scenario, you become a better person, even if you don't become a better trader. But you'll learn more about who you really are. And the way that translates into the market is, some people think, yeah, I'm a day trader and I'm going to swing for the fences. I'm going to make a gazillion dollars, whatever like that. That's what they really believe. That's how they view themselves. But their real self isn't comfortable with that, right? And the two are not meeting, right? So they're acting in this way, the way they think they are, but their emotions are acting in the way they really are. And if those are missing each other, if they're not in sync, it can cause lots of trouble. If you go to therapy, you practice mindfulness, you meditate, whatever it is, those come into sync, right? And then you go, oh, you know what? I'm really not that type of crazy trader. I'm a guy who needs the noise turned down, right? Maybe I'm better as a swing trader, right? Maybe I'm better as a position trader. And then that helps you dial down the emotional stuff. So, the better you know yourself, I just think the better it translates to trading and just in life in general.
Yeah, that's great advice. Have you found in your journey that you've transformed over the years in terms of style and preference?
So that's a really good question. And this is another thing I was thinking about before we hopped on. So I've been trading like 35 years. And I've been playing the drums basically about the same amount of time. Like I started doing both almost to the day. And when you do something like that, when you first start something out, let's say you go pick up the guitar, that 0 to 6 month is like a hockey stick, right? Because at 0, you don't even know how to hold a guitar. 6 months, you're playing songs. So it seems like it's a big, improvement. But when you've been doing something for 30, 35 years, your progress is incremental. You hit these plateaus. And I really thought like, okay, I'm as good a trader as I'm going to be, and I'm as good a drummer as I'm going to be. But this last year and a half has been really amazing to me to stand outside of myself and watch. So because of COVID, because of the lockdown, especially out here in California, everything was shut down. There's nothing else to do, right? My kids are not in school, so I'm not driving them and picking them up. I'm not going to events. And what we talked about before with your resources, your time, your energy, your focus, like all the things that all that stuff was going to was now refocused back on trading, because I was sitting in front of my screens for most of the day, and the drums, because I got a drum set in my house. And the leap I've taken, I don't want to say mastery because it just sounds too arrogant, but I just know the word. The leap I've taken in mastery on both those things in this last year has been incredible. And I never thought this late in my career I would experience that. There's songs that I've played for 20, 30 years that I thought I'll only be able to play this song this good, that I'm now playing like in my sleep. And before COVID, maybe I would hold 2 to 4 swing trades at a time. If I had more than that, just I couldn't focus enough and I couldn't manage them accurately. And maybe I would do, 3, 4 round trips in a day. There have been times that I've had 12, 15, even 20 open positions when the market warranted it in the last year, overnight positions. And there have been times that I've done 20, 30 round trips in terms of day trades, and not done them like in just a haphazard or willy-nilly, but like really like focused, right? Because once again, like all that stuff that sapped my focus and my attention before was gone, so it all went here. So the long-winded answer is, I feel like I've had more evolution in my trading and also in myself as a person in this last year and a half than I probably did in the 30, 35 years before that.
Yeah, that's really exciting to hear. I mean, is it pushing up to, twice the normal, 3 times the normal position sizes or positions, something that left you uncomfortable? Or, I mean, did you really just kind of grab it and said, this feels right, I'm ready for it, market's telling me I should do it, everything's aligned?
Yeah, let me tell you, there were times when I would look at my screen and I would see all the positions there, and every fiber of my body would say, that is wrong, right? He's like, like just, I'm also ADHD, so like there was just too much stimulus coming around. He's like, take some, but I had to go position by position and look at them on the screen and say, there is nothing technically that is telling me to close this position right here, right? Now, the problem with that is that when you have, so many positions open like that, if you get, if they're uncorrelated, it's a little bit easier. But there have been times during the last 12, 16 months where, everything went down, right? And if you have a lot of positions, even if they all go down just a little bit, it can hurt, right? But it's okay if it's okay to take a little bit of pain if you've had a nice run. But yeah, I mean, I'm telling you, there were times when I just, because I trade with Interactive Brokers, which for anyone out there knows, Interactive Brokers interface is basically like an Excel sheet is what it looks like, right? And for most of my career, like, the Excel sheet, my position sheet never went farther than like, maybe an eighth of this, and I had ones that were going all the way down. It's like, yeah, so it was a different experience, that's for sure.
Yeah, that's scary. And credit to you for fighting the urge. I mean, I think it's a tough thing because it's an overstatement to say, but it's almost everything that feels uncomfortable is kind of the right thing to do in trading. And that's not, entirely true, obviously, but you generally, if your body's telling you something's wrong, then, all the other traders are feeling the same way. And that's exactly why it's a good trade, right? So, or something like that. So kudos to you. That's awesome to hear. I mean, do you journal at all? I mean, I know you write a lot and you're a hell of a writer publicly, but do you journal like privately or is that your journal when you write for Lund Loop and everywhere else?
Well, so no, I don't journal, but so I do write the Lund Loop, and I used to do the Lund Loop where I would, so the Lund Loop comes out every Saturday, and it's an overview of the markets, and I put charts in there, things that I'm seeing and things that I think are compelling for the next week. And what I used to do is I used to put actual charts. I'd put anywhere from 35 to 40 charts in the Lund Loop, and I'd have a little bit of commentary. But it just got so unwieldy, and it just was such a process that I decided a number of months back that I would check out video. I'd see if I could just do a video instead, right? And that's been like amazing. So between the discipline of putting those charts in every week, and then also doing the video, and then being in the Discord room and seeing, I'm always in my mind kind of journaling, let's say, right? And then putting that on the screen or putting that in a post. So I don't formally do it, but I would say that's a proxy for it.
Yeah, that makes a lot of sense. What do you think? And this kind of goes to a sort of something I mentioned earlier, and when we were talking about millions of articles about risk management or lots on how to read a chart. What do you think as a FinTwit community, as financial educators, as traders who have been doing this for a long time? What do you think we don't talk enough about? Is there a topic that like just doesn't get enough attention? Anything that comes to mind for you?
Well, I mean, it goes back to what I said before is my advice, the therapy, the mental game. I mean, I know that there's, there in the last 10, 20 years, there's been more about behavioral finance, but even that has to be quantified in ways that are, that can be written about or sold in books that are very generalized, right? When you get into therapy, you just find out about things that are so specific to you. They are universal, but they're also specific to you. And so that's what I think is that I think people don't understand the mental game, but not the cliched mental game. Not the, you can go out there. There's a great graphic out there that's like the 20 cognitive biases, right? And it's real nice and it's listicle and whatever, and that's great. But that can identify stuff for you, but that may not tell you why you have that bias, right? And until you go down that wormhole and say, oh, I wanted a pony for my 5th birthday, and I got a Etch-a-Sketch, right? And then you can identify that. Then you go, oh, that's why I do this. So yeah, that would be my thing, is the mental game.
Yeah. I mean, and maybe this sort of relates to it too, but I thought you would be someone that, I mean, you've talked to thousands of traders throughout your career at this point. You're someone that just networks, gets out there, attends meetings. And one of the things that I find sort of challenging to answer sometimes, so I want to hear if you have any thoughts, is when should someone quit? So how do you know when to push through, right? I mean, I know when I started trading, I blew up two accounts. Two accounts totally went to zero that I deposited hard-earned money in. Somehow I was crazy enough to continue, and I'm glad I did. But that might not have been the right answer for someone else, or hey, maybe I shouldn't be doing this either at this point. I don't know. But how do you have a framework, or how do you help someone get through whether or not they should quit or not?
Yeah, that is a tough one. And just like you, I've blown up accounts myself. I mean, I think I'd be surprised if there's anybody that's been doing this for a long time that's successful that didn't blow up accounts at some point. I think there's two questions there. So there's the when to quit when you're trying to learn it, right? And then there's the more micro when to quit, like when to quit for the day, right? Or when to quit for the month or whatever. The first one is if you can see that blowing up accounts is okay, assuming that you're blowing it up with reasonable amounts that don't ruin your whole life. If that's part of the process for you forming a methodology that you're eventually going to get to, right? You've got to do that, right? If you're just blowing up accounts because you're just throwing money out there and you're not trying to refine, and you're not trying to look at what you did wrong, and you're not trying to find answers, or you're not honestly trying to do it, then it's like, hey, quit, because you're literally just gambling. I mean, you can go to Vegas and play blackjack for fun and have some beers and flirt with a waitress and lose some money, whatever. Or you can go and you can play it statistically correct, right? There's a card. You can buy that card in the gift shop that will tell you if you play it like this way, you'll have an edge. The person that just goes and throws their money around, they're never going to win consistently, right? The person that's trying to follow those rules, they may win and lose. They're going to refine it. So I think that's the answer for the first part, is that as long as somebody is still making progress in their methodology and they honestly seem like they want to get to a point, then they should keep trying. If they're just losing money, then they should quit. The second part is, once you've already established and you are a trader, it once again goes back to to more the casino analogy. And this is something that I take from professional poker players, because when they play, there's no end to their session, right? And then, unless it's a tournament, like if you're playing a cash game, you can play for days on end, right? So how do you know when to walk away from the table? Does it have to do with how much you're down or up? And from what I've read about the top pros, it's when their game starts to deteriorate for that session, right? So they might be up a lot, and then they're starting to notice that, like, I'm not playing as good as I should. I'm not following my rules. Now it's time to, or they may be down a lot, but they say, I'm playing right. I'm playing correct. I'm just getting bad cards. So when it comes to trading, it's the same thing, right? If you're up during the day, and, we've all been there where we get up early. I mean, our P&L gets up early in the day, and we feel ourselves getting a little bit looser, but take a little, and then we come down a little bit. That's the time to say, okay, I'm done for the day. So two different when you should quits, macro and micro.
So I love the first one. That's such great advice. If you're bleeding or blowing up accounts, but you're still being honest with yourself, putting in the work, you're journaling, you're trying to figure out, trying to get better, then yeah, I love that. It is the road to, getting there in a true sense. On the second part, two questions come to mind. So I'm curious, do you have any certain numbers, or when do you call it for the day? Do you, I got to make $1,000 today, day trading. As soon as I get it, I'm done? Or do you do that? And then the second part of that, before I forget it, as soon as, someone's doing well, maybe they open Twitter, they see someone talking about a symbol, they go trade it, they lose some money. That's the time to quit. That's also probably the hardest time to quit, right? Because as soon as you have that good day and you're like, damn, I was up $2,800. Now I'm only up 1,400. I got to get back there. And it is the most dangerous time, but you're totally right. That is the time to objectively quit. So yeah, it's interesting.
That's one of the most problematic areas of trading is when to quit. And there's no good answer. And I think Mark Douglas wrote about this in either The Disciplined Trader or Trading in the Zone. And he said, when you run a marathon or you have a football game or any sort of competition, there's always a finish, right? The clock runs out, or you hit the finish line and you say, I objectively won. That's it. I won, right? The market, yes, the market has a close, but it's always there, right? It's always there the next day, right? Like I always say to someone, like, what if you get up 25% in the first month of the year? Should you just shut it down for the rest of the year, right? Because you get to the end of the year and you're up 25. That's a pretty good return for if you're managing money, whatever like that. Who knows, right? That's the eternal struggle is how do I create a structure for when I should end for the day or for the quarter, whatever. For me, I have a dollar amount that I like to get to when I'm day trading. Okay? I don't have to get there, but I like to get there, and I have to be careful that you get close to it, and you're like, I'm almost there, and you maybe want to push it on a trade that is not optimal, right? So you got to be aware of that. Not so much in terms of my swing accounts. But yeah, it's tough. And I think the other thing too is it's like a lot of things in life, like there's no finished answer. Like you're always evolving and refining your rules for when you do want to quit or when you want to step aside. And I think also, this is so important that it's good to also just know when you're not in the right mindset. If you've had a really good week and you feel good about it, and you don't want to trade on Friday because you just want to say, hey, I want to go into the weekend, knowing I locked up this and I did good. You should do it, right? Because there's nothing worse. Every trader out there knows what I'm about ready to say, right? There's nothing worse than whether it's a day and you're up during the day and then you give it back, or it's a week where you're up and you give it back. You just that close between the closing bell and the opening bell is the worst. Those are the worst hours, right? Or between the close on Friday and the open on Monday, that's the worst, right? All weekend, you're like, I could just be, relaxed and think I banked a nice week, but I had to push that last trade. So yeah, it's a tough one.
Yeah, I love it. I mean, I think this is all over this industry's business of trading is there's no perfect answer. There's no one side. There's no one regular answer because it just couldn't exist otherwise. It's always individual. I mean, you can just. I love when traders, I always get a kick when someone, on Twitter will post a chart and say, where should you buy this? Or like, what's the best place to buy it? And you're just going to get 100 different answers. Then you're going to get all the fights that break out. It's just.
What do you think of XYZ? Like, well, I know the next 5 minutes, the next 5 years, what's.
Totally. Yeah, it's great. So as we sort of wind down here, one of the questions I like to ask is successful trading and what it looks like to you now. So you've been trading for 35 years. Are you driving for returns? You driving to, upgrade the house and or are you, more on the defensive side? What is successful trading to you at this point?
Yeah, that's a great question. I feel like I'm still in my prime. I sound like a, pro athlete. I'm still in my prime. I'm getting better. I love it. I still love it just as much as I ever. In fact, I think in the last year and a half, I refound my passion for it. I like the community. I like writing about it. But for me, trading has always only been about one thing and one thing only: freedom. That's all it's about, right? It was freedom. Like now people work from home. Right. But like before that happened, like especially 10, 20 years ago, like the idea that you could work at home from your desk, right? And you had no boss and you could come and go as you please. Like, so as I get older, I've got kids, I've got different priorities. The freedom to have time to do what I want to do that trading can afford you is super important. I mean, I feel super lucky that for most of my kids' growing up life, I've been a stay-at-home dad, so I've been involved in all of their, their school and their lives, which is, I can't put a price on that. So yeah, so that's it to me, to know that you can kind of, you can eat what you kill, right? You're not dependent on anybody else. And you have the freedom if you want to take a day off or take a week off, or and that's the great thing about technical trading, right? Is that you can do that and then you can just pop right back into the stream by looking at the charts, right? You don't have to worry, So I would say that's it for me, freedom.
Yeah, I love that answer. You're an entrepreneur, and it's infinitely scalable, pretty much, right? For all of us that trade our own money, right? We can always just continue to grow it and kick some butt.
I've always been a big fan and a sucker of the trading community, right? I like being a part of that. I think it's not an element of success, but it is an element of satisfaction and pleasure to be part of that community. And I feel like I'm in a unique position now where I was very lucky starting out to come across some veteran traders, especially lucky to find veteran technical traders back in the 80s that really helped me. And I really enjoy, I don't know how much I help people, but I really enjoy talking to people and hopefully helping them. And it's not all altruistic, because they say if you want to master something, teach it, right? So that's I guess that's a definition of success too, is being able to help people along. Hopefully they can avoid a lot of the mistakes I made, and hopefully have the same ability to achieve that freedom.
Did you have a mentor that you could really firmly point to when you were starting, or was it mostly kind of jumping into the wild yourself?
Yeah, so it was hard to connect with people in 1985. So there really were and there was not much of a retail trading world to speak of. But I did find in the late 80s, I was on one of the first online services called Prodigy. And they had these bulletin boards, right? Which basically the old school bulletin boards. And there was one called Money Talk that I just stumbled across. And I don't know how they ended up there, but there were like 10 or 15 old school traders, guys that were, back then my age now. And these are guys that had studied WD Gann and all these really, they're more well known now, but, Elliott Wave and all that stuff. Mm-hmm. And they were all, it's funny, they were all engineers or airline pilots, right? People that had to do things in a very specific set of ways, or there would be catastrophic failure, right? And technical analysis really resonated with them, because that's what technical analysis is. And I was super lucky to find this bulletin board. We actually, even back then, had some meetups, like we called it, I can't remember what we called it, but we actually met up like 3 different times over a couple of years. We're like 40, 50 people. This is in the early 90s. And we just put up charts. We for 3 days, we'd be in like a Marriott conference room putting up charts. And there was nothing like that going on out in the retail world. So I was super lucky. And these guys and a few gals were very generous to share with a stupid, 18 to 20-year-old who thought he knew what he was talking about and had no idea. So I just like to try and, if I can emulate a little bit of that going forward. Plus, and here's one other thing, and this is something I really feel strong about, is we know that right now in the world, there's a lot of cross currents in terms of equality and cultural differences, whatever. And trading is the ultimate egalitarian activity, right? No, it doesn't matter what your background is, how much money you have, who your dad was, what your ethnic background, your color, whatever. It's the trading field is level. Everybody can rise as much as they want. So I find, I've always felt this, that trading can be super empowering to groups that have traditionally not had access to power. And so, if I can help somebody, learn and access and to self-actualize like that, I think that's great too.
Awesome. I love it. Brian, where can people find you if they want to learn more about your work, what you're up to, stay on top of everything you're doing?
They can just Google Brian Lund and then the Lund Loop. It's a newsletter that I put out every Saturday. It's I talk about the markets, I talk about life. It's $10, so it won't break the bank. And then I'm on Twitter at BC Lund.
Awesome. Yeah, we'll put those links in the show notes. And Brian is a hell of a writer. I think that's really where I kind of found you and said, this guy's got something interesting to say, or at least he's entertaining to follow you through the loop.
You said this guy really overshares probably. What is he talking about?
Oh, man. That's it, folks. All the notes and links from this episode can be found on our website, thetraderist.com/podcast. Thanks for tuning in. We'll see you in the next episode. Brian, thanks so much. This was awesome.
Yeah, thanks for having me. I appreciate it.
Thank you for listening to Smarter Trading. I hope you enjoyed this week's episode. For all of the show notes, links, and callouts, head on over to thetraderisk.com/podcast. If you enjoyed this episode, please leave us a rating and review on iTunes. Smarter Trading is hosted by me, Evan Medeiros, and produced by Ashton Alexander. Thanks for tuning in, and we hope to see you in the next episode.